All right, we're back. Bitcoin off to a rough start this month, so we're going to talk it through, see when maybe it bounces back. Mark Scribner's with us, Mark, financial advisor, Wealth Enhancement Group. Thank you, sir. Welcome. Chart on my tablet, not just this month, this is the first day of the month, but this movement down in Bitcoin, it's gotten ugly. Of course, I could kind of zoom in the end and say, well, maybe we're starting to bounce here, or maybe we will start to bounce. How do you see Bitcoin in terms of where it is and what's next?
Well, thanks for having me. Good afternoon. It's had a pretty precipitous slide for the past 7 months with a high in October. In the past 6 weeks, it's down almost 30%. So
yeah.
A lot of sentiment, a lot of bad headline risk that's happened, especially this past weekend. The Chinese People's Bank of China, for example, kind of sent out a warning, a salvo to their residents impacting Hong Kong that they're not in favor of having this type of currency. So some bad headline risk, and it's really just been in a free for all past couple of weeks for sure.
So there are a few different ways. Some people, there's professional investors, of course, but just in the retail market, there's a few different ways people, I think, look at Bitcoin. Some people are really, really into it. That's all they talk about. They're really, really into Bitcoin. Other people are looking for a portion of their portfolio that's not just stocks and bonds, right? So speak to those people for a moment, because they might be thinking about gold, and then they're looking at Bitcoin, and they say, well, I don't want to have too much, but I want a little bit to hedge my bets here on certain things. So how would you look at it, gold versus Bitcoin, say?
Yeah, I mean, the gold trade's been an amazing trade this year. I actually have a client that literally put $2 million into Bitcoin about 10 years ago, and it's grown to 600 million. So, it's a great trade and very enthusiastic about that. That's not the norm, though. It's a very speculative asset class. It goes up and down. The way that I counsel my clients to look at it, if they're interested in this type of risk asset, is to typically have no more than 1 to 5% of their portfolio allocated, because it is extremely, extremely volatile. It's very sensitive. There's only about 21 million of them out there. And a lot of folks, try to go at it. Sometimes they might buy like an ETF, for example, to get exposure to this asset class. But it is very, very speculative in nature, and it has to have a long-term horizon under all circumstances.
You used the term risk asset. I was talking earlier in the show about how there was kind of a risk-off trade sort of in the morning that people were talking about in the market today as we start off a new month. So how do you look at it now in terms of people's exposure to risks and your appetite? There's the stock market today, appetite for risk from now until at least the end of the year.
A lot of speculation about kind of the stretch valuations of AI. That's been another kind of great example of kind of nosebleed type of things that have happened. But you have to take a long-term approach with this. This is not something that you want to just invest in, and it's not guaranteed wealth by any means. You have to have a long-term proposition with this. And if you want this kind of a non-correlated asset, it typically will not operate like stocks and bonds and gold, for example. And there is a lot of modernization with technology, and digital assets are very interesting for lots of reasons. But it really depends on your risk profile, how long you're going to be invested. But you have to do this really carefully. It's not a guaranteed rich type of thing.
So the whole thing's time frame. So let's just assume that somebody's watching that's closer to retirement. What would you talk to them about, or would you even consider kind of the modern news flow? In other words, the daily news flow, or would it be the same for someone 10 years ago as it is 10 years from now? In other words, you're saying, hey, let's just do this based on how old you are, not on what's going on in the world, or how do you look at it?
Certainly, risk timelines are important, when you're going to retire. Preferably, I would like if someone actually invests in this, 1 to 5% of their portfolio, that they lose their passcode, they don't look at it. Right. It's just so volatile every single day that, it's not something that you're going to want to trade in and out. It's kind of buy and hold and hope it works out. I mean, Bitcoin is the more popular cryptocurrency that's out there. There's many different variations of cryptocurrencies, but long-term proposition is the only way that I would advocate.
But it's here to stay, and all that stuff from a few years ago, where like the Jamie Dimons of the world were making fun of, all that, Larry Fink and these guys at BlackRock. None of that, they've all walked it back, right? It's a real asset class. It's here to stay. It's part of a portfolio. All that's true, right?
I believe so, for sure. I mean, if you just take a basic bank, for example, only 10% of your money is available, to withdraw at any given time. A lot of the stuff, even stocks and bonds, it's all digital assets for the most part.
True.
So there's modernization that's happening. There's efficiencies. There's lots of really interesting things from a scale perspective. Maybe potentially someday that you get your mortgage, via this mechanism and not have to go through the conventional banks and things like that, and smart contracts and all these different variations of this are very interesting. So it is here to stay, but if your time horizons don't match up, if you're going to need this money in 3 to 5 years, and you're going to see this volatility like you're seeing the past 7 months, it's not going to be a good experience for you. But it is diversification for some people, as long as your time horizons are appropriate.
All right. Good stuff, Mark. Thanks for coming on with us, and we'll see how the stock market does as well. We'll talk to you again before the end of the year about all of that. Mark Scribner with us. All right.